No change in interest rate policy. The Federal Reserve maintaining a 0.75% to 1% range for the federal funds rate. It expects, though, future conditions to, quote, warrant gradual hikes, a sign perhaps that rate hikes could be coming down the road. It also has no change in its balance sheet policy. The Federal Reserve saying it will continue to reinvest those securities that roll off, and so continue that balance sheet policy. It did note economic weakness, saying that growth in activity, quote, has slowed, and said household spending rose only modestly. It also noted a decline in March core inflation. But it did say, quote, the fundamentals underpinning the continued growth of consumption remain solid, and it added that, quote, the committee views the slowing in growth during the first quarter as likely to be transitory, end quote, and it expects the economy to strengthen further and for inflation to stabilize around its 2% objective. It noted that business investment firmed, job gains were solid, the unemployment rate was declining, and the decision was unanimous among all the Federal Reserve members. Just a couple notes where they took over some of the language from previous statements where they said the risks appear to be roughly balanced to the economy. It still sees monetary policy as accommodative and says rate hikes in the future were likely to be gradual. It also says rates for some time will remain below a normal level that you'd expect over the long run. So no change, but pretty much taking over a lot of the language, dealing with the weakness in the economy, but saying it expects that weakness to be transitory. Back to you guys.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.